APL Apollo releases Q1 FY27 sales volumes. Key positives and concerns for investors. APL Apollo Tubes has reported its business update for the first quarter of FY27, with total sales volume standing at 744,823 tons. Compared to 794,350 tons in the corresponding quarter last year, the company witnessed a year-on-year decline of around 6%, indicating a relatively softer start to the financial year. On a sequential basis as well, volumes declined from 924,881 tons reported in Q4 FY26. While lower volumes may initially appear disappointing, investors should look beyond the headline number to understand the changing business mix and management's long-term strategy. One of the biggest developments in this update is the introduction of a revised product segmentation framework. The company has reorganized its reporting structure to provide greater clarity regarding the performance of individual business segments, making it easier for investors to track future growth drivers. The APL Apollo branded product portfolio remained the company's largest business segment, contributing 568,691 tons during the quarter. Although this was lower than both the previous quarter and the same period last year, the flagship brand continues to account for the majority of overall sales. A key positive came from the SG Premium brand segment, which reported sales of 58,686 tons. This business barely contributed 14,141 tons during Q1 FY26, highlighting the rapid scale-up of the premium product portfolio over the past year. The premium product mix is particularly important because higher value products generally offer better profitability compared to commodity steel tubes. If this trend continues, margin improvement could partially offset the impact of slower overall volume growth. The company's UAE operations contributed 25,929 tons during the quarter. While volumes were lower than recent quarters, the overseas business continues to provide geographic diversification and supports APL Apollo's long-term international expansion strategy. Roofing products remained relatively stable with sales of 91,516 tons, broadly matching the corresponding quarter of last year. This indicates that demand in this segment has remained resilient despite fluctuations in other product categories. From an investor's perspective, the overall volume decline may be linked to multiple factors including market demand, pricing dynamics, project execution timing, or product mix optimization. The company has not provided specific reasons for the decline in this business update. However, the rapid expansion of premium products suggests that management continues prioritizing value over pure volume growth. This strategy can be beneficial if it leads to higher realizations, stronger margins, and improved return on capital over the long term. Looking at the broader picture, APL Apollo remains India's largest branded structural steel tube company with an extensive distribution network and diversified product portfolio. The company's long-term growth continues to be supported by rising infrastructure spending, urbanization, real estate development, and industrial expansion. Demand for structural steel tubes is expected to remain healthy as government investments in housing, commercial construction, and infrastructure projects continue. These structural growth drivers remain intact despite quarterly fluctuations in sales volumes. Investors should also watch upcoming quarterly financial results, where profitability, EBITDA margins, and management commentary will provide a clearer understanding of whether the lower sales volumes had any material impact on earnings. Overall, the Q1 FY27 update presents a mixed picture. While total sales volumes have declined compared to both the previous quarter and last year, the continued expansion of premium products and the company's focus on improving business quality remain encouraging signs for long-term investors.